While Amazon and Tesla stock are down 50% year to date, Apple stock has been holding relatively steady in line with the S&P 500. In this video, I'll speak with Ziet, talk about investing in Apple stock in a bear market. Welcome back to the channel for the third time. How are you doing?
Good, Daren. We had a pretty good lunch, Vietnamese lunch. Yeah, really excited. Thank you so much for having me again. Hopefully the next time we film, you'll be in Singapore.
We've also recently got Apple watches. You can see Ziet and I. Same.
Tag team.
That's why we are Apple investors. I don't know which came first, either being an Apple investor or Apple user. Which one happened first for you?
I think this one first. I think for me, probably I started with iPhone 11. So from that, it snowballed. So Here we are today.
So we were user first before investors on the stock. You recently bought more Apple stock, and right now Apple is 16% of your portfolio, second only to Tesla at 66% of your portfolio. What were your reasons for buying Apple stock right now?
Well, I think we share a pretty similar portfolio. We are pretty heavy on Tesla. But from what I see, when I look back into my portfolio, I still love it. I still love my allocation of over 60% in Tesla. But I wanted to have more exposure towards Apple. And you can say that it's sort of like a rebalancing kind of act. Because recently I'm getting into a mortgage. So I foresee the coming 2 to 3 years is going to be like cash flow heavy when it comes to expenditure. So that's also one on one side. On my personal end, I'm trying to like rebalance the risk factor, and also because we are in such a close to or probably inside a recessionary environment, right? It never hurts to like lower down the beta of your portfolio. So for those that don't know what's beta is like the fluctuation against the volatility against the market lah, basically. So anything more than 1, like Tesla's beta right now, from what I checked last week, is around 1.9, whereas Apple's beta right now is probably 1.1 only. So you're probably taking 2 times the volatility that you probably should take lah. So S&P is probably 1.1, Apple is around 1.1. Then if Tesla is 1.9, then the risk factor is so much higher lah. So that's on my personal end. Another reason why is also I noticed that the discretionary spending is probably gonna be pulling down. Average American saving disposable income have been dropping. 30 years fixed mortgage rate have hit above 7%. So that's going to be a lot of stress on the average American's pocket and savings as well. So when you see that things are slowing down, I think it's still good to hold and dollar cost average as an investor, but it never hurts to like slowly diversifying away towards maybe a safe haven like Apple or S&P, or maybe even like world indexes, right? So yeah, when the time comes for Tesla to shine again, probably not now, but yeah, then we can always relook, and maybe who knows, like 3 months or 6 months down the road, when touch shoot the recession is over or the crash is over already, then we can like go into Tesla again.
You're reducing your beta, you're managing a risk in a recession, and also because of personal situation, you're getting a mortgage.
Yep.
Right now, you're at 16% Apple, 66% Tesla. What's your target state for both?
Right now, I'm like 65 and 15. Probably I'm going 50 and 25. So 50 Tesla, probably 25 Apple, and the rest are still pretty safe stocks like Google and also Amazon. So I only got 4 stocks in my portfolio right now.
Talking about safety, in the last financial crisis in 2008, Apple stock went down by more than 50%, around 53%. This time, in this recession, Apple stock was down roughly only about 20%, more or less in line with S&P 500.
Yep.
What's happening there?
In my opinion, Apple today versus Apple in 2008 is a completely different company. Back then, 2008, I think a lot of people are still using Nokia, using BlackBerry and stuff, and Mac and also iPhone was looked as a joke. And Steve Jobs couldn't even like connect to a Wi-Fi with his first presentation. So today Apple is totally different, because Apple is like a staple for a lot of company and also a lot of individuals. Like me myself as a creator, probably Daren, you can relate as well. We use Apple watches, AirPods, iPhones, MacBooks, iPads, like the list just goes on and on. So it's a staple, and we become like I became reliant on the product to run my business, to run my activities or day-to-day life stuff already. Hence the valuation today is like 2.3 trillion in compared to last time, and that is why I think it's a completely 2 different company right now, and we are ever more resilient because of the balance sheet, the the share buyback, and also the way Tim Cook runs the company. He actually, fun fact, Tim Cook actually joined Steve Jobs and started training to replace Steve Jobs around 2003. So he started training in 2003, and the late Steve Jobs passed away in around 2011. So when Tim Cook took over Steve Jobs, Apple's valuation was about 150 billion US dollars, and today it's worth 2.3 trillion dollars. And that is why Warren Buffett states that Tim Cook is the best manager in the world that he's ever seen before. So yeah, if your money is with such a strong company, with such a strong manager, I mean, what's there to worry, right?
Apple's got a few things right. It's now the most valuable company in the world. While Tim Cook was a hand-groomed successor for Steve Jobs, we've seen in other companies, just because someone's a hand-groomed successor doesn't guarantee success. Disney, when they have Bob Iger, he was hand-grooming like Bob Chapek to be a successor. Then when Bob Chapek took over for the past 2 to 3 years, it didn't turn out well. The rest of the C-suite actually had to go back to the board of directors and say, we need a new leader. And Bob Iger came back to Disney recently. So just because someone is hand-groomed doesn't always mean it is better. Beta for Apple is now down. Then people are wondering, Ziet, what's your expected annual return on Apple stock then?
Personally, when I started investing in Apple, I wanted to just slightly beat inflation. So if inflation back then was around 3%, I'm okay with Apple being like 4-5% annual return. And today, inflation in US is about 7.7%. Potentially, because we are filming like 1 week before the CPI data is coming out, probably 7.4%. So to me, right now, at this kind of environment, I'm okay with if we can achieve like 1.5 times the inflation. So if 7.5%, probably around 10% return per annum, I'm totally fine with it, because like we all know that it's a mature company. It has probably peaked already in terms of innovation, but I mean, it's Apple, you never discount them, right? So obviously we will have AR, VR headset in the future. We'll have electric cars, smart cars, maybe more SaaS product as software as a service. But to me that's upside lah. I don't really like the value that in today's valuation wise. So what I see that it's a strong company, and if I can beat like inflation, that to me that is more than enough already.
Beating inflation, which is high nowadays, so target of 10% return per year on average. Not every year is going to be there. Some years lower, some years higher.
True.
Talking about upside, what do you see is the biggest opportunity for Apple next year?
Personally, I don't see much breakthrough in 2023. But if you ask me, iPhone 15 wise, probably USB-C is going to be incorporated into the mainstream lineup, because right now, as we can see, I think in October, EU has won the case against Apple, and Apple is forced to move away from their Lightning adapter towards USB-C port. So I think with that said, because iPhone is the biggest revenue segment for Apple, 200 billion year over year in terms of revenue. So if there's such a huge change, people would think that it's a small change, right? But changing a port, it could actually encourage people to move from Android towards Apple. So, and also people using the iPhone X is probably due to change already. So that said, I think a new wave of purchase is going to come in iPhone 15 lineup, and that is probably going to boost iPhone in terms of their revenue and also their sales lah. But obviously that's not a huge breakthrough. We probably would see AR VR headset. I don't know what the release date is going to be. There are rumors going around it's going to be released in 2023, but personally I'm a skeptic and I don't really value that as much, because for such a niche product, even Apple Watch, for such a niche product, it needs time to build up confidence, obtain user feedbacks, and then pass it on to developers, and ping pong, and also second version, third iteration. Then probably when we reach mass adoption, it's like just like Tesla. Probably this is like 10 years ago's Tesla when it comes to product a mass adoption. So it will take time to build up hype and also the trust and confidence for the use cases for a AR VR headset. As for now, I think it's also safe to say it's just an upside. Yeah.
I'm hearing from Ziet that the iPhone, which is the biggest driver of revenue for Apple today, would still be the main catalyst for next year. Going to USB-C, important hardware refreshes for people on older iPhones.
Yeah.
any AR, VR device is not going to be a major revenue driver next year. It'll take probably a few years to materialize as it ramps up.
Yep, agree.
What's going to be the biggest challenge for Apple next year?
Let's not say even next year, right? Even right now, I think Apple is facing a lot of challenges in terms of their supply, their production plant in China, their Zhengzhou plant, lots of protests, lots of social issues when it comes to their plants. And also, I think I can attest, like myself as a consumer in Malaysia, I ordered my iPhone. I waited for almost 2 months just for my 14 Pro Max. 2 months. I don't know, is it faster in Singapore? Probably, right? Yeah. So, well, Malaysians, that's a sad part because we don't have the Apple retail store here. Well,
Not yet.
not yet. Maybe soon, right? So, supply chain issue, that's always going to be a nightmare for companies to solve. But my personal view is that Apple has done this before. They're in the business for iPhone production maybe for the past 15 years already. So they probably have seen it, and and rightfully so, they're diversifying towards India and also Vietnam. So I'm optimistic about that, but also not putting on too much valuation when it comes to India and Vietnam's production, because it takes time to scale up to what they have in China. So when you're just starting, this is probably like a Giga Berlin like that for Tesla, for Apple lah. So it takes time to like ramp up, ding dong with regulators. That takes time. So obviously, it's a good start, but there's more ahead to see. That's probably the main main challenge that I'm seeing right now. But obviously, I think same goes to Tesla. Discretionary spending is probably going down quite a lot, especially in such an environment, and people are going to be more prudent with their spending, right? Well, to me, like spending on iPhone is a prudent spending, but understandably, it's still an expensive product. So, yeah, that's probably the main challenge right here.
The weather agrees with Ziet. You can see the rain pouring right now. There are challenges even in this holiday season. Apple has said their supplies for the iPhone 14 Pro are limited. That means they cannot close and fulfill all the demand for
Exactly.
the very important holiday season. And sometimes people are not going to wait 1 or 2 months later to buy an iPhone. They may go to a competitor product.
Yeah.
Ziet talked about AR, VR device. The expectation is it comes out or gets announced in Q2 next year. Developers need time to work on it. I want to ask, what do you think about the potential total addressable market for Apple's AR, VR device? Do you think it's more like a mid-sized market like MacBooks and Apple Watch? Or could it be like the next iPhone, a mega platform for the future?
Ooh, spicy. We are getting the numbers right. Alright, so personally, I think I read somewhere before, sales for PS5 is around 80 million units in 2022 alone. So if you times like 1,000 US dollar each, it's probably like an 18 billion US dollar industry. Because the way I see it, I think PS5 is probably a sort of a comparable to an AR VR headset, because it's borderline discretionary plus entertainment, right? So, but obviously we can't like equate it to a console. Probably you take some discount over there, probably 10 to 15 billion US dollars. But if you look at another approach, we have like what 330 million population in the US. You say like between the age group of 0 to 20, 21 to 40, 41 to 60 and above, right? Probably we're gonna see people that will buy AR VR headset around the 18 to 45 years old. So if you take like 25-30% of the 300 million, it's probably 100 million people that's probably interested in this. But that's like the total, right? The serviceable market, probably if you say 50% Android, 50% Apple, out of the 100 million people, probably 50 million are interested in it. So if you take 50 million population times with the expected price by Apple Mac rumors, they say 500 US dollars each. So probably it's a 25 billion total kind of size lah. But I remember looking at Apple's quarterly report. I believe iPad is around 30 billion US dollars, and wearables like Apple Watch, AirPods, they are around 40 billion US dollars. So I think the proxy is almost there already, 10 to 15 billion US dollars. And I think renowned Apple analyst Ming Chi Kuo, he said that in 2023, Apple is probably gonna sell around 1.5 million units at 2,000 US dollars each, 2 to 2.5K lah. I don't know how true is that. Well, I think 1.5 mil times 2K, it's probably around 4 billion US dollars. So as a start, as a first year, 4 billion US dollars, compared to Apple's 2.3 trillion market cap, it's what 0.3%. It's very minimal in terms of the sizing. So if you ask me what category would it equate to when it comes to Apple's product, probably close to the wearables, but maybe like 1/5 out of it, 20% out of it. So yeah, we probably are seeing 5 to 10 billion US dollars for the first 2 years.
That doesn't sound material for a company Apple size. Again,
Yes.
it's already the world's most valuable companies. You need big growth catalysts, new industries like healthcare or even transportation. A lot of people make fun of Apple's entry into cars or EVs. There have been news that it's been delayed from 2025 to 2026. There's a lot of leadership changes
Yeah.
out there. While many people make fun of it, do you think the car opportunity could be bigger than the wearables opportunity?
Probably, but understandably, the margin on cars is probably not on par with the margin of the wearables. So again, I think with such an expensive product, a car, Tesla is what 50,000-60,000 US dollars each. Apple is probably gonna price around that same price point. So it took Tesla how long to reach mass adoption? Apple is going to face that nightmare for the next 5 to 10 years, just for the subsequent 5 to 10 years after their launch, just to get the same volume that, or even come close to a quarter of Tesla's volume today. Yeah, that's probably the main challenge for them.
I'm walking away with a sense that Apple's a great cash cow, solid business, solid ecosystem. But what's the next S curve, as many Tesla investors like to talk about, that's going to take a little bit more convincing to materialize? Apple's a far more secretive company than most, so it doesn't reveal all its plans openly like, let's say, a Tesla.
Yeah.
So hopefully there's something behind the scenes. Tim Cook pulls up something from his pocket or something from a manila envelope.
And I think, well, that's one more thing. We always hope to see that, right? One more thing, right? But I think when people look at Apple, people are always hoping like there's a huge redesign of the iPhone. There's a huge redesign of the MacBook. Well, to be honest, for such a huge giant or tech giant, they don't need to do that. They can just change their price point, add another 5% margin, and boom, that's another, huge sum of profits that probably other company will only achieve in 15-20 years time. But Apple has that pricing power. So within a flick of a switch, they can just increase the margin by 5-10%, and there you go. They solve the problem with inflation, cost inflation, wage inflation. That's the power that they have right now. It's such a behemoth. Yeah.
One last question then. Ziet, is Apple a more attractive investment now in a bear market compared to last year's bull market?
That's a tough question. To me, Apple is always a good investment. That's my personal opinion. I use Apple a lot. I rely on Apple as a daily driver. As an investment wise, I think at current valuation, it's risky for sure, being at the top. Any changes in the management or any changes in the politics wise, any changes in geopolitics wise, US, Apple, chip bans and stuff, it definitely will affect. And but all said and done, I think Apple is in a strong position to weather that. They know how to. They have been in this game for the past 15-20 years. So if anything, Apple is like the prime company to face this kind of issue.
Ziet mentioned he uses Apple products daily. We don't use Tesla products daily, even though Tesla is our biggest part of investment. So when you use a company's products and services so much, how does it shape your views as an investor?
Good question. I think as an investor, if we are so close to the product, we really understand the nitty-gritty details, right? We know what's happening in the tech space because as an Apple fan myself, I watch a lot of tech products review, not just Apple product review. So like MKBHD, I know what's happening around. I know what's happening over the Android side, what's happening with Nothing phone, with Xiaomi, Oppo, right? So as a user ourselves, because we understand the product so well, we are also more keen to do more research. And it doesn't feel cumbersome, it doesn't feel tiring when it comes to watching videos of tech products. Why? Because, well, we enjoy tech products ourselves. So it's only natural, it feels like a second nature, it doesn't feel like investment. It feels like, well, I'm just checking out my hobby. And just a fun fact, I actually bought into Apple way before the M1 chip was introduced. Well, because that time I was using the MacBook myself and I was pretty frustrated with the Intel chip MacBook. So at that time, I heard the news that Apple is actually dealing with ARM chip. They are developing their own Mac Silicon. So that gave me a confidence that if Apple as a company that always releases a product that is so top notch when it comes to initial release, right? So Intel is so down the road. So that gave me the initial confidence boost to go into Apple, and I think that's the advantage that even financial institutions, they are not so savvy with that, right? If you drive Tesla every day, or if you have a friend that drives Tesla, he probably can tell you maybe this is problematic, maybe this can be fixed, maybe what BYD is doing as a competitor, So all in all, you get more sensors and you get more knowledge, information left and right as a user and investor.
Great point there on how using a company's products and services gives you more organic opportunities to understand, do more research as part of your hobby, as Ziet mentioned. Now, has Ziet tried a Tesla before? Find out soon. Subscribe to his YouTube channel. Find out soon. Thank you, Ziet, for sharing your views on investing in Apple in a bear market. By the way, fun fact, my Chinese family name is Xiong, which is bear in Chinese. So if you found this video useful, please click the like button. Subscribe to Jet's channel to learn more about Apple and Tesla as well. And click subscribe to stay updated to more videos on Tesla and Apple.